What is going on, you guys, and welcome back to another video. I hope you guys are all having a great week. Probably having a better week than I am because I've kind of come down with a bit of a stomach bug, and it hasn't been very nice. It reminds me when I was back in the Philippines, like just before the pandemic. It was my first time going to travel there. I got like a pretty bad stomach bug for a week straight, and I don't know what it was, the food, this or that, but it was not friendly. And this isn't as bad, but it just reminds me of that, and it's just kind of, overall I'm doing okay other than that. But I did want to come today and give you guys two stocks to buy. I will just be honest, these are two stocks that probably wouldn't fit my portfolio, aka they're not stocks that I would buy, but they may be stocks that are very suitable for you. And I want to share with you guys a couple of ideas. I'll explain why both of these stocks are not for me as we go through, but I always want to kind of give you guys ideas on the channel and maybe some different perspectives of stocks that we wouldn't usually cover. So let's get into that today, guys. If you enjoyed, give this a thumbs up, and I will just say thank you to Passiv for sponsoring this video, but we will talk about them a little bit later. Our first stock on the list today is our hyper growth stock. It is the company Roblox, ticker RBLX, trades for $44.58 USD. This is, in the big scheme of things, a very new stock to the market. They don't have a lot of history to look back on. They IPO'd, I believe it was a year or two back. And Roblox is really one of the earliest plays on the metaverse. It's actually, in my opinion, one of the truest plays if you're actually looking for some metaverse exposure outside of, let's say, a Meta or whatever your other plays are. A lot of people like to think of this as just like a video game because it is a video game. And my brother used to play it. He loved it for quite some time. But as we'll come to see, Roblox is actually a far more robust business than simply just a video game. And the idea behind this is that Roblox has essentially been built into a platform, right? We can think of it like an ecosystem where you can essentially develop games within the game or within the platform. A great example of how it's expanding beyond just games is that they hosted a concert within the game. So an in-platform concert with Lil Nas X. This garnered 33 million views. More recently, they had one with 24K Golden, another artist that had over 10 million attendees, and they're able to sell virtual merchandise that you can buy for your characters and whatnot. It truly is like a virtual world, really. And again, I haven't really played the game myself, but the more and more you come to learn about it and expose yourself to it, it is truly a really fascinating concept. And how Roblox makes money, there's a few different ways, but obviously one of the major ways is through their in-game currency known as Robux or Robux. You essentially can use your US dollars or dollars, purchase these and do upgrades to your character or partake in a bunch of different things. They even have a subscription service like Roblox Premium, where you can essentially get X amount of Robux per month or a discount on the various Robux. One thing to point out with this company is that their target audience is absolutely catered towards kids and children. So if you looked at their daily active users and the breakdown, the vast majority of them would be under the age of 18, like legitimately children or like young teens who, in all honesty, don't have the most, typically don't have the most discretionary income, and they're not the best to monetize. That said, from everything that I've heard out there and within our academy, we have a bunch of students who have children, and I'm sure you guys watching this video, if you're have children or you have somebody around that age, I'd encourage you to leave a comment down below if you are familiar with Roblox or if your kids are asking for Robux for their birthdays or for Christmas presents. I do firmly believe that is the case. And oftentimes you'll be asking the parents for money, but clearly they're doing a good job of growing. On top of that, another way that this company does monetize, which is actually quite unique, is that the actual developers, so the people within the game that are creating, essentially, let's call it games within games or quests or things that you can do within the games, there is actually a financial incentive for them to do so. In fact, this chart basically shows that by year 2026, fiscal year 2026, or a few years out, they're expecting to pay about $2.5 billion simply to the developers that are on this platform. And of course, Roblox gets a cut out of all of this. And what they're essentially building, which I find to be a very fascinating concept, is they are building this ecosystem that incentivizes people to build within it and to literally code up these games, and it teaches people. There's an incentive that it automatically attracts developers in. And with that, the platform just gets better. It gets deeper and deeper. And then, of course, you're going to have more and more kids and more people kind of retaining on the platform. So it's a flywheel it's an ecosystem that operates kind of like a flywheel. And I think, again, it's just a very interesting concept nonetheless. And to look at the financials again, this is why I say this company is not for me. And again, this is just for me personally, because when I look back at any type of research or I'm looking at a company, when I see blank pages like this, I just don't feel as much comfort, investing in a stock like this without much history to look back on, without much trends or anything to kind of note. That said, this is what you kind of trade off when you're looking at a high growth IPO stock, because one thing we can say for certain is this stock is growing very, very fast. Year over year revenue, in many cases in the high double digits, even breaking the triple digits. The pandemic definitely helped this company out a lot. But just reading here some key points from their most recent quarter release, fiscal year 2021 revenue doubled, grew 108% year over year. So tremendous growth in that regard. Fourth quarter 2021 results, revenue increased 83% to 568 million. Bookings increased 20%. Average daily active users were basically 50 million, an increase of 33% year over year. Here's an important one. Average bookings per daily active user, or ABPDAU, $15. And this is a number that obviously needs to climb over the years if they're going to be wanting to monetize and get to profitability. Down here, I have one more box highlighted, January 2022 key metric estimates. I've just highlighted this bottom row, which jumped out to me. The exact metric that we were just looking at, between $4.02, $4.08, down 22 to 23% year over year. So clearly there is some fluctuation in this. And again, this is a key metric for the company. And of course, as mentioned, they are not profitable. They're far from profitable at this point. And if you actually take a look, to hear what management has to say on what their plans are, their objective at this point is not even thinking about profits really. They are strictly at a point where they're trying to grow their user base. They're trying to expand. They're trying to get a better foothold into Asia and really just build up the platform, and profitability is likely going to be something years down the road. However, one positive or one shining light to this is that they have been free cash flow positive since year 2018. Again, in the big scheme of things, is it huge? Maybe not. But in terms of how we value a company like this, again, I don't have much luck and success in these companies because they obviously don't have earnings. They're obviously very, very tough to predict out on, especially with the volatility in their growth rates. But if we were to look at a metric such as price to sales, right? We can't compare the share price to earnings, again, because there's none, but we can take the share price relative to the amount of revenue they collect. And one thing I can say for certain is that they have come down to much more human levels than they have over the past number of months/year. At one point during the peak when Roblox was on fire, they were trading at 40 times revenue. 40 times. And here they sit at a rate of 13, which again, in the big scheme of things, you can make that assessment of whether it's cheap or not. But one thing we can say is it is definitely a lot cheaper than it was just a number of months ago. And I know, unfortunately, we had a student, Daniel, one of our most active students in our community, who basically had been riding Roblox all the way up. And he rode it all the way up, and I believe he rode it all the way down. And he's sharing his lessons that, taking profits on, especially on a high growth or speculative stock like this, it's a mistake that he won't make again. But again, just taking a look at that share price, it was one heck of a ride. And I do think we're at a territory where it may make sense. Now, again, this is not a stock that I would personally go for just due to the lack of history, due to the lack of numbers, and it just kind of exceeds the amount of risk that I'm willing to take. However, if you are an investor that wants to get into the metaverse space, this is a very clear, and like I said, I would say almost a leader, like a legitimate leader in the metaverse field and the world that they're building. There is a lot of cutting edge technology that is going on into this company. And I do believe that conceptually, how they have built up this infrastructure within their business, it is a very, very attractive model nonetheless. But what I would say is just understand that if you are going to be investing in this stock, profitability is going to be years and years and years and years down the road. Again, that is why it's probably not a stock for me, but with the shares today trading at below their IPO level, I think it's worth the consideration. That is the company Roblox, trading today for $44.58. Now, before we move on into our next stock, which is a Canadian dividend stock, I want to say thank you to Passiv for sponsoring today's video. Passiv is a partner on the channel, someone that we have worked with for honestly years and years and years now. I've been using the platform for so long, and it's just an amazing tool, honestly. Given the fact that it is completely free to use, especially if you are a Questrade user, you can essentially get the fee waived on their premium plan. But it is a tool that integrates in with your brokerage, meaning you don't have to punch things in manually, you don't have to do anything. It will literally drag and drop in all that data for you. And it's a great way of looking at a top-down look at your portfolio. One of the biggest concerns that I think investors have whether they're index fund investors or whether they're, retail, individual stock investors, is being able to rebalance, being able to essentially monitor your portfolio, especially when you get to a number of different holdings. And by not monitoring it, you can find yourself in a pretty weird situation, especially with all the volatility that we have in the market, right? You can be totally overweight, totally underweight. Well, what Passiv does is you can essentially set these targets. You can set the allocations that you want, and they will notify you whether you are above, whether you are below, if there's any rebalancing trades that you need to make. And again, if you are on their premium plan, if you are a Questrade user, you can even do things like one-click trades. Literally click within the platform and it will go and do all the trades for you. I know I do talk a lot about Passiv on the channel, but it's because I really, really do like the team there. I like the service. And again, it is completely free for you guys to go check out and try. So I'll include a link down below this video. It's a referral link and they will know that I sent you, but I want to say thank you to Passiv for sponsoring this video. Now back to the video. The second stock for today's video is a Canadian stock for you guys. It's a dividend stock and it is a brand new stock to the channel here. First time covering it. It is the company CI Financial Corp. The ticker is CIX.TO. Today they trade for about $18.54 Canadian and they pay a nice 3.88% dividend. Now CI Financial is one of the largest wealth management, asset management companies out there. They offer a variety of products. In fact, if you're not familiar with the name, like at the top of your head, if you have been investing for quite some time, there's a very good likelihood that at some point in your investing careers, you've owned a CI mutual fund or a CI ETF. Maybe you even had your money managed by Asante, which is Asante Wealth Management. They are part of the CI family. This company has $384 billion in assets, which would be a mix of AUM or assets under management, as well as assets under advisement. So it is a massive, massive company. And of course, like a lot of wealth managers out there, they make their money by charging management fees and essentially, kind of getting some money there on these big, big piles of assets that they have. Now, I want to start off with a notable point that I came across during my research, and it's something that has ticked up over the previous years. It is their financial leverage. So we're going to start off with the bad and then move to the good. I don't want to call this a red flag, but it is something to be aware about. We see it tick up basically from about 2 times about 5 years back to where they sit up at about 5 times. The company is levered. And if we were to look at this article here from Barron's, they state 16 deals in 18 months. CI Financial is on an acquisitions spree. And this is actually, I think, a very interesting point to talk about a company like this, because the financial industry, which is obviously where they operate, and the wealth management industry, this landscape is really, really changing. And it's been changing. And it's been changing actually quite fast, to be completely honest. And it's funny, when I started working in the industry, so I started working here for my dad, what was it, back in 2013 or 2015, about 7 years ago now. I immediately, when I started working here, I started noticing this. When I went to the different events and I noticed these mutual fund companies all trying to make this pivot. Well, fast forward a number of years, it's a full-blown shift that they're going through right now. Basically, where these companies who were traditionally like, your mutual fund providers, or they'd offer you these different products, being like a strictly mutual fund provider these days just is not going to cut it. Like, people are weeding away from them. They're understanding the power of ETFs. They're understanding the power of robo-advisors and managing their own money. And if you look at all the numbers, it's just a declining space. And not only CI, but companies like CI, I believe, really have had their backs against the wall, and they were kind of forced to start making changes. Otherwise, they're going to die. Like, they would just literally, they would die because there is a shift going on in how we manage, or how we invest, and how we have our money managed, to put it simply. So if you look, even over the past number of years, they've evolved to offering, ETFs, right? These are something that is very, very new to all these different companies who used to basically be active management styles. We take a look at, as part of these acquisitions that I was talking about, just to highlight one, they extended their ownership of WealthBar to 100%. So this is now part of the CI family. This is a robo-advisor service. So think of it like a Wealthsimple Invest, right? They are in a position where they have to put money up front, they have to invest, they have to take on debt in order to expand their offerings, or else it's just not going to be very good. And again, is that a bad thing? Maybe so. Like, as a business, I personally think you like to make moves and you like to take direction based on your initiative. You don't like doing it when your back's against the wall. But nevertheless, this is something that I think had to be done. And that's essentially what they're going for, is just asset management on all regards. Now, what I do like about this company, however, is that they have been buying back shares. This is something that obviously is a benefit to shareholders, and we see this being very consistent, their buyback program over the past decade. As well, they pay a dividend, which has been a little choppy as we can see here, but I've highlighted something called the total yield, which is essentially if you looked at what you yield as an investor, if you included buybacks and dividends, sitting up in the mid double digits. So actually not too shabby at all. I wouldn't be buying this stock necessarily with the expectation for a bunch of capital appreciation, but dividends, if you like the 3.8% yield, I think it's a very, very fair consideration. In fact, I have here basically a look at their cash flow, ample coverage in cash flow to cover their dividends. Again, this is something that I think would be actually quite fine. As we can see, the PE ratio has essentially just come down and down and down and down. I think this is very much due to the factors that I talked about so far and the negatives. It's just something that is being baked into the price. That said, trading at $18.54, it's kind of a different type of company today, and it may be very new to a lot of you guys. A lot of you guys probably haven't considered investing in these types of companies for your financial exposure, but I do think that it is a very fair alternative. It's a very fair alternative to investing into, your big banks or even like a power, this is actually similar, not similar to a Power Corp, but there are a lot of comparables I would draw. It's just an alternative way of playing it. The shares have clearly come down quite a bit, basically, honestly, over the past number of years, but more recently, they've come down quite steeply. And I think that trading at a PE of 10, it could be worth a very strong consideration just to go in and buy this yield, buy these dividends, buy these buybacks at a cheaper price. Again, both of these stocks that I covered today, probably not stocks that I would buy. And I hope you guys can appreciate that, just because I cover stocks on this, channel, like I would probably say, to be honest with you guys, like 70% of the stocks that I cover on the channel, I don't actually, maybe not that many, maybe like 60% of the stocks that I cover on this channel, I don't personally own. I'm constantly trying to give you guys new ideas and pointing us in the right direction. But I would just say both of these stocks are probably just not ones for me. Because I already have all my financial exposure. I'm not necessarily interested in a stock like this. And again, Roblox is a stock that's just a little bit out beyond my comfort zone. But there's so many different types of investors out there. There are so many different types of strategies. And maybe these two stocks would be ones that you can go into and research deeper. Always do your own research. Always do your own due diligence. But if you guys enjoyed today's video, I would really appreciate it if you gave this a big thumbs up. Make sure you're subscribed and hit the bell for notifications. You have to hit the bell. That way you're notified when we do make posts. And of course, as always, we do have our Investing Academy down below. If you want courses, training, a community, literally everything, like the coolest things I would say ever, it's $19.99 a month, $19.99 a month plus tax, but a month. And you can cancel anytime. You can check it out. You can come see what we're doing. Live sessions every 2 weeks, live session coming up next week. Some really exciting partnerships in the pipeline. I'll be making some big announcements for you guys, but it's just going to be, it's pretty freaking cool. I will tell you that much. And I know I say that every time, but I'm just super excited for it. It's that first link down below. Again, I thank you to Passiv for sponsoring this video. They will also be down below. But yeah, let me know what you guys think of today's video. Let me know your thoughts on these two stocks. You like them, you dislike them. I'm all ears to hearing what you guys think. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.